Sudip Bandyopadhyay as well joins in on the show. Sudip, hi. Just while we were counting down to that all-time high on the Nifty, I mean, optically still there, but just wondering whether the market is now sort of in the near term at least running out of triggers.
Well, not really, Asha. I think today's RBI policy, once people have digested it, they feel that it is little hawkish as the question of rate cuts or the question of accommodation or easing of monetary policy is not there. And RBI very clearly will be monitoring the situation very closely. Their comfort lies in the inflation going to around 4%, not 4% exactly, and that is some way, some distance to travel. So obviously the euphoria which we saw initially when the policy was being announced dissipated very quickly. Now the uncertainty continues to remain over US Fed action next week, and I think people are now looking at that. Also, the fact that our markets have moved up quite a bit in the last few weeks, so some amount of profit taking, some amount of caution is probably warranted. So I won't be too unhappy or worried that there is some amount of correction or consolidation, whatever name you call, is happening at this stage. So maybe it's good for the health of the market. And once we have crossed this Fed policy hurdle, and the expectation still is around the fact that probably there will not be any more hikes. Fed will continue its policy of pause, though yesterday's action by Australian and Canadian central banks really have made the global investors a bit worried on that count. But I think post the policy, things will be much more clearer. On the domestic front, I think we have to wait for the monsoon's arrival, progress and distribution. I think that will be very, very critical.
There. But Sudip, what's your take on the entire new age tech vertical? Zomato finally has clawed back to that IPO rate of 76 after seeing quite a bit of decline, but finally coming out of that range and hitting that 76 mark on an intraday basis. Paytm definitely is flying away in the trading session. A thumbs up coming in from BofA. What's your take? Will you be a buyer on either of these names, and maybe PB Fintech for that matter? Street is saying that the positives are factored in. Do you expect any upside there?
Not really. I will not recommend a buy or be a buyer in any of these stocks at this stage. Yes, things have improved compared to what they were, let's say, a few months back. And what is most important is all these companies have probably realized fully well that the listed space, they have to really focus on profitability and path to profitability. Now, as far as PB Fintech is concerned, and most probably for Zomato as well, the path to profitability is visible. At least there is a clear path. As far as Paytm is concerned, there is some excitement over the disbursals of loan on behalf of third party, which they are doing. But to say that path to profitability is clear and visible probably will be a bit of a stretch. So I will wait and watch all these three, and will probably only recommend or get into buying these stocks once they are actually profitable. I would rather focus my energy on the other two companies, which are Delivery and Nykaa. I think both are, while they are new age companies, they are really delivering the service in a different manner. The age-old logistics business, which has been there for thousands of years, Delivery is just doing it in a different way, in a structured way. They are bringing technology, they are bringing digitization to deliver logistics and logistical solutions. Now, this is the need of the hour. At some stage, they will get over the hump and start making money. And I think things will look up. I will not buy now, but I'll watch this very closely. I would say the same thing about Nykaa. I think globally, women fashion are a rage, and some of the topmost companies in the world are in this business. We can talk about LVMH, and they're one of the most promising companies and most prominent companies in the global stage. And some of these Indian companies which are into fashion and fashion retail will definitely go a long way. The delivery of service is a mixed phygital model now, and I will be watching Nykaa very closely and probably recommend a buy much earlier than I probably will recommend in case of Paytm or a PB FinTech or even Zomato.
Right. Okay. Let's also get in all the buzz from the dealing rooms, given the steep decline that one has seen intraday in the market. Sharad joins in with more. Sharad?
Well, yes, in focus we are having Avenue Supermarts, and dealers are suggesting that the stock could be under selling pressure as the channel check suggests that its competitor in the online space, Big Basket, has actually lowered its prices as compared to the price increase taken by DMart Ready, which is the online version of DMart sales, and also for JioMart. Now, this reduction has been there in the pricing gap seen between the Big Basket and the other players over here over the last 4 months itself, and what we are gathering from channel checks is roughly 400 to 500 basis points of differential has actually been covered in this pricing gap. Now, of course, a more online intensity of competition is expected to kick in, and also Big Basket is the largest retailer, almost 3 times the size of its nearest competitor. Now, looking at Avenue Supermarts itself, the channel checks are suggesting that the brand, especially on their online front, has become very aggressive, and the marketing campaigns are on a roll, especially on the customer activation side. Now, looking at the stock itself, more pain might be there going ahead, as the management has stated they would be targeting a 5,400 crore rupees turnover and the EBITDA break-even by almost FY25, while PAT break-even is expected to kick in by FY27. Now, the fourth quarter itself, the impact numbers were there, the slow recovery was there, margins were impacted for Avenue Supermarts, and even Nuvama came out with this reports where they have actually trimmed their EPS numbers by roughly 2% for their FY25 forecast.
Okay, that's all the buzz that you're seeing currently from the dealing rooms. Just want to revisit what the market texture is looking like. NTPC, that's the one stock which is holding up quite smartly, currently holding about almost 2.6%. There's JSW Steel, there's ONGC and L&T, which is actually going strong. From within the broader markets, where also you are seeing some profit taking, Dixon is holding up 3%, MCX is up 2.5%, and then HAL continues strong, another 1.5% higher there as well. Although the pressure points are IEX, like Anisha has been flagging off, that stock on the futures is now down 9%. Idea is down 4.5%, and to think of it, this was up 7% yesterday. There's HPCL, Indian Hotels, India Cements, they're all seeing a bit of a correction come by. Within the large caps, the profit taking is largely in a Kotak Bank, in Eicher, in TechM, Tata Consumer, M&M, Tata Motors, Wipro, and of course Unilever and TCS. These are names which are seeing that bit of correction play by. Kunal, what's the sense on the Nifty Bank though? Do you think it'll emerge stronger? I don't know how much today's profit taking would last or where it'll end, but eventually?
I think today what has actually happened, actually in the last 1 hour, there has been a massive unwinding of the put options, because today is the weekly expiry. So we were looking out for the round strikes and the strikes, but there has been a lot of support for the Bank Nifty, at least throughout the week. The first strike was 44,200. There was a good amount of quantity in terms of open interest built up from the put writers, and then the round figure mark of 44,000. Both of those levels have been broken on the spot basis, and that generally is not a good sign, because typically we see that when on an expiry day, when these kind of crucial levels are broken down, or when there is an unwinding of one leg of the option chain, that leads into a more of a corrective phase for the the index, whichever way it is, whether it's Nifty or Bank Nifty. So I think in this case, we could probably be now looking at a possibility that maybe another couple of days we could be looking at least a 200 to 500 point correction on the Bank Nifty.
Oh, so the market texture has changed, and you would no longer recommend a buy or a hold. It would be a bit of a sell.
Yeah.
Okay, so the sentiment seems to have changed a bit. Important levels have been broken, so need to watch out for what happens at the Nifty. Of course, at least 600 is being maintained for now. For the longest time, we were trading in that 500 to 600 range, almost 7 to 8 sessions. We just kept moving around that, and looks like the market is going to take a bit more time to break out of that. Yes, we topped 700 today, but nonetheless, going back to that 600 level as far as Nifty goes. Sudip, just wanted to come back to the point that my colleague Sharad was making on Avenue Supermarts. It looks like that there's a lot of negatives and headwinds for the company rather than tailwinds, right? And of course, it's been very expensive, throughout. What would you do if you hold Avenue Supermarts at this time?
Well, I think it's a fantastic company. They have done very, very well. They have reshaped the Indian grocery retail in a big way. But always my challenge was that valuation was extremely rich. And I think, at that kind of valuation, the margin of error is very, very limited. And I think that's exactly what is, bothering all of us now with competitive intensity going up significantly, and online grocery delivery, online delivery of products which Avenue Supermarts sells becoming the norm. I think they have to gear up, and they have to get their act together on online piece as well. And I think that's a huge challenge where a lot of other guys are going to fight them tooth and nail. So if the trend becomes online as opposed to visiting stores and buying, I think they have a big problem in their hand. And that's where the valuation starts getting questioned. So at this stage, I think if somebody is holding on to the Avenue Supermarts, my recommendation will be maybe they should book profit and just wait in the sidelines, let things settle down. And this is going to be an intense battle for the wallet share as amongst these players, whether it's a big basket, whether it's a Amazon's grocery delivery business. So I think, and of course, we should not forget the big boy Reliance Retail. So I think the competitive intensity is what makes me recommend a sell in this stock, considering the high valuation.
That's an interesting take coming in on Avenue Supermarts there, but just want to revisit some of those defense names as well. We've been seeing that renewed vigor, especially after the US Defense Secretary visited the country and you had the German-India defense ministers meet as well. There is that submarine contract which is being talked about, and that's definitely putting on fresh vigor for names like a Mazgon Dock, for instance, and HAL, we in any case know has been on a tear off late. Cochin Shipyard too, the delivery data on these stocks have been pretty good of late. There's BEL, Bharat Dynamics, Garden Reach. All of these stocks, have been seeing a fair amount of excitement of late. Today, of course, they are easing off with the rest of the market. But Naresh, if at all we were to correct a little bit further, any defense or railways names, considering that's where the trend seems to be moving, that you would pick out?
So in defense, it would be Bharat Electronics, which gave a fresh new all-time high recently. So that is a stock which, if it dips to 110 to 114 mark, you want to get in. The rest of the names have overdone a move in the near term. So Bharat Electronics seems to be the best one in terms of risk reward. Maybe a Bharat Dynamics would be next, which is short-term breakout. A retest of the breakout point would be interesting. On the railway side, the stock which looks interesting now is Texmaco Rail, which has come out of a multi-year breakout, very similar to what happened with the rest of the names. So that's the one which looks promising. The PSU names in railway pack, it is RITES, which has not done well, but at 360, 380, that looks a good pick in terms of risk reward.
Okay, so that's about some of the other counters, but let's get the BTSC trades also out of the way if we can. Kunal, you go first. Is it a sell today, buy tomorrow, given the fact you're a bit bearish on the market now?
Yeah, not bearish on the market, but expecting another 300 to 500 points on the bank Nifty. So maybe another percentage points on the Nifty. But then two stocks which are actually doing pretty well. So Indigo is the first stock which looks attractive on the charts. The stock is trading at 24, 45, 50 levels. So it's a buy. It's been a consistent uptrend for Indigo. So buy with a target of 2,500, stop loss at 24.20. And HDFC Bank could probably be a stock which can shield most of the volatile phase of correction for the bank Nifty. So the stock has been holding on to that 1,600 support twice over the last 2 weeks. So expecting very similar for HDFC Bank this time around. Buy with a target of 1,650, stop loss at 1,600.
Right. Naresh, what about your BTST trades?
So two buys. First is a buy on NTPC, a clear breakout into new 52-week highs, a defensive stock which generally does well with a market taking a pause. So looking at it as a trade for the next few sessions, stop loss at 179 and a target of 190. Second is a buy on ICICI Bank. For the last 2 weeks, 930.35 has been a support. So risk reward trade here, a very small stop loss. 934 as a stop loss, target 955.
So at the index level, what's the trade, if at all you can suggest anything in terms of fresh ideas at the index level, Nifty, Bank Nifty? Naresh, the question is for you. Any fresh trade at the index level?
So in terms of it would be a buy on Bank Nifty itself around the current levels. Would keep a stop loss closer to 43,800 and expect a bounce back. So a small 150 pointer stop loss, and Bank Nifty looks interesting purely for the fact that ICICI and HDFC Bank are shaping up well.
Okay, fair enough. But the entire banking space, yes, Kunal, you talked about it, how you are a bit expecting that there could be a further slide. Any names that you would want to flag out that look weak, or any contra bets that you would like to make?
I think the likes of Axis, so it's a round of profit booking, and in the round of profit booking, the ones which have performed very well, they would tend to see an underperformance or a sharp correction. I think IndusInd Bank, Axis Bank could be the ones which could probably correct a bit more sharper as compared to the other names. IDFC First Bank could also be one of those stocks, I think from 73.5 odd levels, which is acting as a major resistance. That stock could probably get into a correction. But on the other hand, we could actually be seeing a phase where the likes of ICICI Bank, HDFC Bank, the ones which have been underperformers, they could actually try and show some sort of outperformance over here. So I think it's more of a balance which the markets would probably get aligned into over the next couple of days, and the ones which have rallied up significantly higher, 20%, 25%, etc. in the last 1 or 2 months, they are the ones which are likely to get into a corrective phase.
Cement stocks, though, they've been holding out quite okay off late, and I'm taking today's price action completely out of that. But this week, yes, they've done pretty well. There's been moderation in the raw material prices, which has clearly helped the sector. Remember, both international coal and petcoke prices continued their declining trend, and that's really been aiding the move on some of these stocks. Sudip, just wondering if you're looking at any of the cement names?
Well, I like cement, Aisha, and we've been liking it for some time, and we believe that the emphasis of government on capital expenditure and the kind of capital expenditure plan they have unveiled in the budget very definitely augurs well for Indian cement manufacturers. The emphasis will be on infrastructure and construction, and that does require cement. So pan-India cement players with well-established capacity will definitely benefit. Leave aside the monsoon season and monsoon related demand, subdued demand and things like that. But if you take a 1 year kind of a time horizon with elections, general election coming in 24, and capital expenditure by government remaining on full throttle, cement companies like Ultratech, Ambuja, ACC, and even others having pan-India, capacity will benefit. If I have to pick one, I'll go for the leader Ultratech. If I have to, go down, then probably I'll go for mid-cap cement companies like a Birla Corp. I think there is significant value, unlocking opportunity there.
Okay, so that was about the cement names which have been off late doing well. Today, of course, it's not a great day. But, the heavyweight Reliance at this point of time, Sudip, what will be the word on that? Is it just the time that one should use this opportunity to buy it and then hold it for the next 2 to 3 years whenever that unlock and those IPOs do play out? Or will it give you better opportunity? So just wait by for that.
Well, I'm the believer of the the first logic which you just now mentioned. I think you can never hope to time the market. So if you are a long-term investor and you believe in the what's Reliance doing, I think there is no better time than now, and that now could have been 5 days back or 5 days down the line also. Just buy Reliance, hold it for 2 years, as you said. Yes, the value unlocking definitely will happen. The IPOs will come. The investments will come. Strategic investors probably will come in some of the businesses. And earlier we were talking about geo and retail. Now we should also talk about geo, retail, as well as the the new energy businesses. Now these green energy businesses also will attract investors and will attract valuation. So absolutely right. Buy Reliance, hold it for 2 years.
Let's begin winding up then for the day. Before that, Anisha, anything important that's on tomorrow?
Not really. There are a couple of data points that we're expecting from China. So that's something that we'll track given the fact they impact the metal prices quite a bit. So that's a couple of factors to watch out for, the Chinese PPI data and the CPI data. The US initial jobless claims is also something that we'll watch out for. Uniparts will be in focus. There could be initial supply coming in for the counter because the lock-in opens on 46% stake. So watch out for that. ICICI Lombard tomorrow will be the last day to become eligible for dividend, and HDFC, AMC and Indian Hotels will go ex-dividend, so there might be a bit of technical adjustment on that. But other than that, not much. But yes, the most important cue, it's Friday.
Yes, that it is. And well, yeah, but the Nifty Bank expiry is not happening from tomorrow. That's only next month. So yeah, but anyway, let's begin winding up for the day. It's been a little disappointing. While we did manage to hold on to that 18,600 print on the Nifty, we've clearly given up those 2023 highs, that level of 18,700. Just managed to cling on to that mark, at least on the Nifty futures. But even the breadth of the market came off, in fact more so than what the benchmarks did. So on closing, it's a count of 161 to the declines with just about 28 to the advances. Let me go through that list because that's pretty short there. L&T, ONGC, Power Grid, JSW Steel, NTPC, these are names which have held out. There's been Dixon, MCX and HAL also which have done well. Tata saw a fair amount of OI build up, although the stock definitely cooled off from the top of the day, but that's going home with a 2.25% cut. IEX, like we've been flagging off, that sank to the session lows, almost a 9% cut coming in there. There's of course been Astral, a gainer, even though it's been a very, very choppy ride that the stock has had, but managed to close in the green by about 1.5%. TechM, rank underperformer, that was the case yesterday too, another 2% gone on that stock. And then Concord managed to hold out in the green and seen an OI build up of about 12% or so. Idea, Indian Hotels, HPCL, India Cement, these have been some of the other underperformers in trade. There's also been Kotak Bank too, 2.6% is the cut that stock saw. There was also Axis Bank, which was a rank underperformer today. In fact, banks were really on the sidelines, to be fair. There's also been Grasim, Sun Pharma, Eicher Motors, Apollo Hospitals, Tata Consumer. And to think of it, Tata Consumer was actually the biggest Nifty mover yesterday, managed to hold out by 3%. Today, it's part of the losers rank. M&M, Divi's Labs, Unilever, Tata Motors, Titan, TCS, they've all been losers. Even Britannia and Nestle, which were the gainers yesterday, they too have slipped in the red. But that's pretty much it. The US futures as well are indicating towards a bit of a soft start itself. So let's see which way trade tomorrow heads out.